You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Speaking of exciting on the network, got a new program out there for you. Always working on new content for you. If you guys are like our Advisors Options show, but you say maybe you want even more, our show's only once a month. Well, we got you covered. Eric Kott and his team over at the OCC launching a new show called, appropriately enough, Coffee with Kott, aimed directly at the asset manager, financial advisor space. The first episode just dropped, as the kids like to say, yesterday. So check it out. Wherever you're listening to this, you probably already have seen it if you subscribe to the full network. If not, make sure you're doing just that, not just subscribing to Volatility Views. So you get the full breadth of our network. You can check it out. Let us know what you think. A fun new addition to the network. And of course, however you listen to this show live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do, yes indeed we do, like to hear from you guys. And joining me on the old program today, speaking of new additions, he's not quite new. He's been on before. It's just been a while since he's been on Volatility Views. We are joined by the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to Vol Views. Do you remember how this all works? It's been a while.
I think there's the show's about some vols, spiky vols, something, market moves around and we talk about it. Something like that.
Actually, you're on the wrong show. This show's all about sorghum volatility. So I'm afraid you're on the wrong program.
Or rebar. Wasn't that what's that crazy product that trades in China like that?
Yeah, the Shanghai rebar, yes.
Yes, the rebar.
It's all about rebar volatility here on the program. Sorghum and rebar, the two hottest areas, the growth areas of the volatility space. Speaking of the growth of the volatility space, it is growing. And I'm pleased to be joined once again by our cohorts there. First off, from T3, we have our old friend Simon Ho, the CEO, I should say, of T3 Index and the creator of the titular Spikes Index. Simon, welcome back to Volatility Views, sir.
Thank you. I enjoy being here. Looking forward to it.
Glad you do. I'm glad you wake up so nice and bright and early for us. It's a fresh way to start your day, talking a little bit of volatility over there across the pond, as they say, the other pond, way out there to Australia. And also joining us a little bit closer to home, I believe, by way of Princeton, New Jersey. We are joined by Shelley Brown, the executive VP over there at MIAX, aka the Miami Options Exchange. Now the exchange group with 3 exchanges there, and maybe soon to be an equity exchange. Shelley, welcome back to the show to you as well.
Thanks, Mark. Glad to be here.
All right, with the gang all assembled, let's dive on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly what it says. We review what's going on this week and indeed today from a volatility trading and trending and analysis and unusual activity perspective. Coming into showtime here, we're seeing pretty much a week-long session and series of mild rallies, pretty much killing what vol was left out there. As we're coming into showtime, we're seeing both spikes and the VIX Cash hovering right around that 14 handle, pretty much within a hair's breadth of each other. So not a lot really out there to spook the market. Most of the major indices rallying yet again today. S&P, NASDAQ, and Dow all up close to half a percentage point on the day. One of the first days this week where they're all pretty much moving in a similar degree. Usually we've seen them moving, some NASDAQ leading the charge, maybe S&P in the middle, the Dow kind of the laggard for most of the week. But today, moving pretty much in lockstep, most of them close to right around 0.5% to the upside. It seems like all the recent news, there's nothing really to concern anyone out there in the market. The market's certainly not concerned about the third failure of Brexit over there in UK, of course. The third rejection now for the Prime Minister's plan to leave the EU with Britain. Now it's kind of in, as they say, she said herself, the implications are grave for the future of Brexit. All this uncertainty and one of our largest trading partners not really weighing on the market at all. Like we said, markets rallying and the volatility coming in fairly aggressively. So an interesting, or I should say, start to our show and an end here to the trading week. Let's go back around the horn. Let's go in reverse order. Let's go back the other way from the way we started. Shelley, we'll start with you. Obviously, we didn't have you on last week, so maybe I can get a couple of seconds of your thoughts at the top of the show here. Obviously, you got your first settlement under the belt, a big deal, particularly for a new vol product, because we know in the vol space, settlements are much more in focus than they are in, let's say, other asset classes. So maybe let's start there. We had John and Simon give their thoughts on the first settlement. I'm curious about your thoughts as well. And then what else has been going on in your perspective from the vol world and indeed from the spikes world since the last time you joined us, sir?
Well, the settlement went very smoothly. There were no imbalances this month. But everything went as planned. The markets opened tightly in the SPY options on MIAX. Everything settled very quickly. We had our cash value set at about 9:30 in 15 seconds and disseminated it out to the world. Again, everything went very smoothly and just as expected, just as tested. Everybody seemed very comfortable with that, and I think that'll help us going forward, having that first one under our belt, as you said. It's been an interesting few weeks. We've been working with several of the major banks and talking to several of the interdealer brokers. There's a tremendous amount of interest in the Spikes product. Still have not seen any large trades go up, but the interest is growing. Every day we get additional calls. The markets are tightening up some, and everything's moving along as planned.
I should say now you have your first settlement under your belt, Shelley, and it went well. Also, welcome to the world of making everyone in the vol space angry. Because once you put out any sort of settlement number, nobody's happy with it, right? It's too low, it's too high. It's however it affixes or it compares to their position, they're going to be angry. So you guys probably got the heat just like the CBOE folks did. With, it settled on the low of the week. How could you possibly do that to me? What are you doing against me? So welcome to that world as well, Shelley. I'm sure it'll be fun for you going forward.
Yeah, we appreciate that. And again, what's one of the differences between our product and the VIX is that it's a very transparent settlement, but also because it's in SPY, you've got 15, now 16 options open simultaneously trading the individual options. And if there is an imbalance and we were to have a potential opening price outside of that NBBO range, we go into an imbalance process, and all the major market makers from all the U.S. options exchanges have a presence here, and everyone can see that imbalance, and it'll force it back to the inside of the market, And of course, the SPY markets are tighter, even on that 10-to-1 ratio. They're much tighter than the SPX markets. So we envision our settlements going forward to be very precise and very fair.
There you go. And then when I inevitably get the angry emails about the settlement, Shelley, I'll just forward them to you, and you and your team can enjoy
I look forward to
all
that.
the fun that unfolds therein. But you mentioned working with the retail platforms. We're seeing that starting to aggregate and trickle through in some of the retail size orders we're seeing hitting spikes. So clearly your work starting to resonate there. Let's keep going back around the horn. Simon, now that you're up bright and early, you get an early glimpse at the vol space because you're up before all of us usually. What is catching your eye here today and indeed this week from a volatility perspective?
Well, I think it's panning out pretty much as we guessed. You know, you have that competition every week to sort of guess where we're going, and I think all three of us, from memory, thought it would go down, and that's precisely what's happened. I mean, we're seeing the market gradually just grinding up here. It's not very exciting in terms of the action, and as a result, you're finding that vol is coming down. It's not exactly a surprise. What is interesting
let me stop you right there, Simon, before you keep going. You mean the competition where I almost exactly predicted with a bullseye where we are right now? Is that the competition you're referring to? I just want to make sure you're referring to the correct competition.
Oh, my
Is that the one you potentially are? I'm at about 14 and a quarter. I believe we're at about a 14.12 or so in spikes right now. So nearly within the 0.1, which we consider to be a bullseye. But we got the rest of the show to go, so we'll see. But I just wanted to throw that out there. Is that the competition you potentially could be referring to?
Possibly, yeah. But you know what? You never sing too soon, right? We still have 48 minutes to go, so you never know.
Plenty of time for it to rally exactly to 14 and a quarter and sit there for the rest of the hour. That's what you're saying?
Yeah, that's right. That's exactly what I'm saying. So, yeah, I mean, this is really quite a whole lot of drudgery. We kind of anticipated it, or you anticipated it, spot on. I would have thought there would be more reaction. As you say, you got some pretty big catalysts. Brexit now looks pretty dire. I mean, what are they going to do? So it's either you have a new referendum or you have a no Brexit deal. None of those things are going to be particularly good for markets, I would have thought. But also in the US, I mean, we've had such a fantastic first quarter to begin the year. And given what's going on with the Fed and so on, I'm a bit surprised that nothing more is coming of this, to be honest.
Yeah, it certainly has that feel of it, which is kind of why I guesstimated where I was this week. Because I thought we'd come off, but it did seem like there'd be a couple things lurking out there that would keep us from the depths. I forgot where was the meatball. He was in his 12 handle again. So I had a feeling we wouldn't quite be there. I knew there were enough unknowns lurking out there. I thought to give us a little bit of juice, and that is what we're seeing right now. Of course, we got a full close to an hour left, so as we know, anything could happen in the ball space. But it is nice to see our efforts rewarded every now and then. Mr. Rock Lobster, you didn't play last week, so you don't get to laugh smugly at our thing. Maybe this week you will. We'll see. But what's catching your eye this week, and what's lighting up the crazies in your pit chat over there talking vol today, sir?
So we did a poll in the pit chat just because I knew I was coming on here. Everybody said that we would not close above the 14 handle today. So we're spiking around that number. Everything is like right at 14. So because we were trading in mid 13s for a little bit. So
we can close below 14 all we want as long as we end this show right at 14 and a quarter. We can close wherever the heck we want. I don't care. I don't care about any of that.
So I clearly I understand what you want. However, what all the pit chatters want is not. We want lower vol. What I find remarkable is we had 1 day of vol last week, and then for the most part, it's been like 10 vol market. So all vol is pricing everything that has yet to happen. So this Brexit thing is annoying. I think that's keeping the vol up. This whole interest rate inversion crap is annoying, keeping the vol up. The trade deal that never gets done, keeping the vol up. And earnings, which usually take vol down, are coming out in a couple of weeks. So the market is still, for the most part, is pricing vol that we don't have. It's 12% at the money. And I don't really see it. I can see reasons for it to go down until some of these dominoes start to fall. And like the guy said earlier, there's still like too many things just sort of hanging out there. So what we do have is there's just a lot of future decay, and overall everything in the vol space kind of dies on that, which of course we like it. We like that to happen because we like things being predictably crappy when it comes to vol coming in. So I think just that's where we are. We have vol looking for something to happen, within now and 30 days from now. And we had one day out of 2 weeks where we actually had some vol, and that's about it. So until something, until one of the dominoes falls, I guess, we'll probably have this slow grind, because today doesn't feel like a 14 VIX day to me. I don't know. It doesn't feel like I had 14 vol day. It doesn't feel like that.
Well, you're right. It is weird. We had, kind of a sell-off in terms of vol all last week until the end of the week when it all came back in, and now we spent the rest of this week kind of taking out what we put back in Friday. That's pretty much been our trajectory for the better part of the past 2 weeks. All vol coming off. Oh, here it goes back in, plus some more. And then here it comes right back off again. And that's kind of what we've been up to, which is an interesting dance we like to do here in the vol space every so often. And I know we're not quite in the monk zone yet. What are we in right now? Are we in what zone, what creatively named zone are we in right now, sir?
You know what we decided? The zone of confusion, zone 2.
Zone of confusion.
Are we going up?
Okay.
Are we going down? We don't know. Zone 2 is the zone of confusion, I've decided.
Zone of confusion, maybe zone of vol indifference. They're kind of like, when we get that flat VIX curve, who knows what's going on. I like it, though. That's not bad. See, you turn to the crazies in the pitch chat, and I say crazies with love, by the way, because I know a bunch of them listen to this show. But save me your hate mail. Better than
zone 2.
Save me your hate mail. Send it to Andrew. But yes, it is better than zone 2. Anything's better than zone 2 at this point. So we got the monk zone, when everything's boring, not very sexy, and then we've got the zone 2, the zone of indifference / confusion. Choose maybe confusion a little bit better. So we'll go with that. I'll let the crazies run with that one. Speaking of the crazy, let's see what's crazy out there in the world of the vol futures. Like we said, VIX Cash and spikes both hovering around a 14. We're seeing the futures out there pricing in the front future in April. Looks like about 1.25 premium to the cash. So things pretty much back in line with kind of what we used to have before that brief period with last show. We were backward. We saw a little bit of that as everything was going crazy last Friday, but now things are calm again. The cash, a nice discount to that front month future. 2 months out, going out to May, we see the futures pricing at about 2.5 point premium to the cash. And then again, it kind of flattens out there again once you get out to like June and especially July. July is a 17.10, then it's 17.25 to August. You can go all the way out to September, and it's pretty much 17 and to use the old vernacular, 3/8. So then out to 17.5 all the way to October, and then 17 double to November. So and pretty much then it comes down again. So pretty much August to December, there is little to no negligible vol premium in the entire. So pretty much nothing's going to happen for the second part of the year is what that's telling you, listeners. So you might as well just trade August. Why would you pay all that extra money, a little bit, just to get all the way out to December out there? Mr. Rock Lobster, anything catching your eye or the crazy's eyes out there in terms of the term structure? I know you talked about this before, kind of just how remarkable it is, how flat it gets once you get out past August, right? Why would you want to pay, what is it right now, 17 whole cents to go all the way out to December from August, Mr. Rock? Why would you do that?
Well, that's we've talked about, like, I'm not, this is the thing I'm at, and I pride myself on trying to figure out what the VIX futures are trying to do, but, my opinion is as good as anybody else's. What I don't get is why the back month is not closer to 20. Like, okay, like we have generally for when I look at trading vol anytime in the first 3 terms for the VIX futures, any flat vol to me just signals higher vol down the road. And I'm trying to remember when we've had that longer term number so flat at 17. That's not a ton. And even like in 2017, we had like a pretty steeper, even when the front end was down at 9. I mean, we had like 18, 19 vol in the back for the future. So the flatness I find odd and unexplainable right now. I was trying to think of even a trade for it because I know it can't stay that way forever. It has eluded me. My only thought is that I still think the flatness is they're still looking for weirdness, even though you would think it would be we would have just a steeper curve overall. They're discounting the crap out of that back month vol, and I do not get it, to be honest. It feels very inexpensive, and nobody wants it. So my other thought is, who the heck is selling back?
Yeah, I mean, they're crushing December. December looks like the screaming steal of the term structure right now. I'm with you.
We're not going to see a lift in this December from now until I know that back month trades at a severely discounted delta to the front. That I got all that part and how the curve moves, but it is. I have to say it is a little. We do not have a single digit VIX president anymore. So I find it odd, and I would like to find a way to buy it, and I just haven't found a trade I like enough to put on that would make it to make a difference.
Cost you 0.3 of a point to extend your vol exposure from July all the way to the end of the year. That's it.
It just does not sound
that seems like why I get it. December is a quiet, seasonable period, but you get all that period between then and now too. It's not just December you're getting with that. So yeah, that seems crazy. I know, Simon, we're all waiting for the moment when we could sit down and compare and contrast the VIX futures curve to what's coming from the underlying perspective on spikes. In the meantime, though, while we're waiting for that, are you as mystified by this kind of term structure? And I know you're kind of a recent addition to the show, but we've always joked in the past that the answer to all vol questions they lie somewhere there in that term structure. They've been priced in somewhere. And right now I'm kind of scratching my chin saying, what questions are they pricing in? Because I'm a bit befuddled. Are you as confused as the Rock Lobster and I are about this term structure here, sir?
Oh, I don't know. I mean, I'm a little less concerned about the back end not being sort of nearer to the 20 handle. I just think that we've had a pretty low vol period over the past several years, and ultimately this has just been chipping away. So, of course, I agree with you that the premium for the longer term contracts should certainly be inbuilt in there, and it's almost always prevalent. But I just reckon that there's sort of been a collapse in vol. I mean, we've had a couple of episodes. We had the end of last year, there was a little bit of an episode, and of course the last one before that was the Volmageddon. But in between times, so little happens these days. It's to me, it's not ridiculous that it would be that flat going out. I just think people are not really sure about when the volatility is going to return. As we said earlier, in the part of the conversation earlier, this is pretty unprecedented, and also with all of the factors going on. I mean, you mentioned it, the trade deal ambiguity, you've got Brexit, you've got so many things that you could potentially occupy yourself with. But I think it's just a pattern that's been set over the past few years whereby, spikes tend to be fairly short-lived in volatility classes. Everybody's pretty happy that, central banks will come to the rescue. So I think that's what it is, the manifestation of this maybe it's complacency. I'm not sure that I'd necessarily call it that, but I think that is the root cause of what's going on here, because everybody's comfortable that should anything happen, that the Federal Reserve and other central banks around the world will coordinate action to prevent things from going too far. How long that can go on, though, is a whole other question.
Spikes, I see what you did there, sir. Well done, well played. Working it into every sentence. I like it. Staying on brand. Speaking of spikes, let's get into the activity on the options side of the fence this week. And as I mentioned, as Shelley kind of alluded to at the top of the show there, it does seem like some people, particularly on all sides, the retail in particular, were waiting for that first kind of settlement to get under the books. And now people maybe feel a little bit more comfortable. Seems like more retail platforms are coming online as well, because we are starting to see that type of volume trickle in. The big size trade out there is still that vertical, that 2025 vertical in May. That kind of went up in the first week, and it's kind of been dominating the tape. But we're getting some movement in the top positions, which I like to see, which means there's stuff actually going up there. Things are trading. April 20 calls now are the number 3 position out there. Also, the April 16s, which seem comparatively reasonable compared to the 20s and 25s going up. Also have some puts in the top 5 here. The April 14 half puts, which are looking pretty interesting now as well. So some interesting paper going up. Shelley, this seems like all your work there talking to the retail platforms, it seems like it's starting to pay dividends. Was that kind of what you were hearing from them? Is that maybe some of them were waiting for that first settlement before they really opened the floodgates? Because it does seem like the retail is starting to come alive out here now.
I've certainly seen a little more retail. I wouldn't say the floodgates are quite open yet, but certainly the few retail firms that weren't ready in day one, some of them have completed the work they needed to do on the risk side of sports spikes. One of them, the last big one, should be ready to go in the next week or so, they're telling us. So that's a good thing. Again, it's a matter of having the markets tighten up a little more. We did find out last week from OCC that they are offering favorable margin treatments for traders, especially market makers, between Spike and VIX. So that should help tighten up some of these markets as well.
Andrew, before we get into some of the other paper, I'm curious, your crazies there in your pitch chat, they represent, shall we say, the bleeding edge of the volatility space, the early adopters of the volatility space, if you will. Have you heard anecdotally talking to them? Are any of them starting to kick the tires or be intrigued by this new vol product called Spikes? Pretend that Shelley and Simon are in here. You're just talking to me. What are you hearing over there, sir?
We mention it. We have not started any trade as of yet because most of our clients live in the VXXB area.
That's true. You got a bunch of VXXB.
Something that will work.
You got a bunch of VXXB devotees in that chat. They don't really trade anything else. They didn't really trade VIX. It's all VXXB.
Well, I mean, we do trade VIX and we use the products against each other a lot. So part of a lot of this trading is, you got to sit there and watch things tick every month. So as an educator guy, I'm watching the stuff work and just getting a feel of how it works to be able to communicate it to people. And so it's still in the very early stages for us because as much as I to trade just about any equity product or vol product, I do tend to watch it for a while first to see how it moves and trades and get an idea of how things work. So that is how I view it.
Why would you be so boring? Take such a sensible approach to a new product, sir. I can't believe you would dare to take your time to do your due diligence before trading it and recommending it to your client. Why would you do such a thing?
It's just one of those dumb things that we do where we try to figure out how it works.
Try to figure out how something works. Get a settlement or two under your belt for it. Why would you do such a mad thing?
But I mean, it looks solid. It looks like it's tracking well enough. So. And once we can start finding how, it's mostly too is I like these products and like a product like the Spike will be cool because I want it for like that bang upside. And when you're trading products like this, one of the coolest things is to be able to you want to use the products and sort of bend them to your will. So when you have products that have like potential high blast on the upside, they can hedge like other stuff. So if you want like SPX iron condors and stuff like that, and if vol is going to go up, this product will shoot and it will give you the quickie, let's just call it ADD style hedge you want, where you're like, oh, vol's up, boom, I'll sell it. It takes care of a lot of my downside risk temporarily, and then I can ride out the balance of my position if I want. So the products, like I use the vol products and the indexes in conjunction with each other. So once I see kind of like the spiky aspect as far as, is it going to give me the bang for the buck that I want? It's going to deliver X dollars. That way I can close that part of the trade and then move on with the rest of whatever the market's going to do at the particular time. So when we look at stuff, that's kind of how we follow it. So we are conservative yet not conservative when we look at stuff like that. But I like the fact that it could just blow up in a good way and does what I want to do, which is exactly what you want out of a vol product.
That is the name of the game in the vol space, right? Getting all that juicy upside, and or at least being in the game until that happens. So interesting stuff. Your crazies there in your chat are kind of like my canaries in the coal mine in the vol space. They get on some trends early, so I like to kind of get the pulse of what they're into, what they're up to. Speaking of what people are up to today, let's go out to the big VIX options here. Kind of a light day, like we mentioned, too. Not a lot on the tape coming into showtime, about 140,000 contracts on the tape, which is well shy of the ADV, which is over 500,000, about 550,000. Even that's off a bit since our last show, off about 20,000 from the last show. So again, we had that spike. Again, pun intended. I'm being like Simon. It's working into all my vernacular now. We had that spike last Friday. And that was kind of about it. And it was short-lived. And then ever since then, we've kind of seen all this kind of come off. Saw a spike in volume as well. And then pretty much coming off. Let's break down here what people are trading out there, the top positions out here. Let's go from the bottom. Let's start. Let's just have fun. Let's start with the smaller one. Number 10 out here in VIX land are the April 24 calls, about 228,000 contracts. Number 9, the May 37 halves. Interesting strike selection there, 230,000 there. Number 8, the April 30 calls. Again, there always has to be a 30 somewhere. Feb, Oc, April, it doesn't matter what month we're in. It's always got to be a 30 call position open somewhere. This time it's number 8, 245,000 contracts. Number 7, the April 26s, 270,000, tied pretty much with the April 22s. A couple hundred contracts difference, also 270,000 of the April 22s. Number 5, the April 20s. Nice little April call strip there, 293,000 of those. Then we get to our first put on the list, the April 12 half puts, 389,000 of those. Number 3, actually, the April 13 puts, hot on his heels, 429,000. Number 2, the May 27s, 446,000. Number 1, the May 25s, 495,000. Those are courtesy of our friend we talked about recently. Perhaps we dubbed him the new VIX whale. We shall see if that persists. Total of about 9.4 million contracts outstanding, about 2.2 million on the calls, about 7.2 million on, 2.2 million on the puts, 7.2 million going up on the calls. In terms of activity, I was lighting up this week. Let's see here. We talked about some of the retail flow we're seeing going into some of the spikes options there on the VIX options side. Seems like it's ratio vertical time again, Mr. Rock Lobster. A lot of 1x2. In fact, today, kind of interesting. I'd be curious, and Simon, anyone else wants to weigh in on this as well. Which of these you prefer? First, we saw going up the April 18-20 1x2 call spread. Again, our old friend selling 1, buying 2, selling the April 18s 10,000 times for 67 cents, and then buying the April 20s 20,000 times for 44 cents. So doing the whole thing actually for about a 21-cent debit, actually paying for that one, but getting a nice tight little 1x2 there. And then a little while later, we saw the April 17-24 1x2 going up 5,000 by 10,000 times, doing it, selling the 17s for 84 cents, and then buying, probably selling. This is a bit of a weird one. Let's assume it is, for the sake of argument, it is selling 1 and buying 2, because they both went up pretty much near the. It could be buying 1 and selling 2 to unwind 1, because these are not opening either one. So they could be unwinding. Let's put that caveat out there. But let's, for the sakes of our analytical purposes, let's talk about them both in the same perspective of selling 1 and buying 2. So selling 5,000 of the Ape 17s for 84 cents, buying 10,000 of the Ape 24s for 23 cents. So in that case, doing the whole thing and collecting 38 cent credit. Mr. Rock Lobster, 2 somewhat similar 1x2s, similar in the strike range, 1 a little bit wider, 1 getting a credit, 1 doing a debit. Do you have a preference, sir, as which of those you prefer?
I'm looking at them. I'm trying to think of which one I like. So just for let people know, I don't like the 1x2 in the zone 1 or zone of confusion, buy 1, sell 2. I'm not a fan of that trade. I kind of like it the other way.
No, definitely the other way, yes. Which I'm pretty sure is what they're doing here.
Which, I'm just looking at the volume here, 65. It's kind of mid-pointy. It's hard to figure out which way they're going. It is number 1.
But let's lean that they're doing them both, selling 1, buying 2, which is the way I think we'd want to do it here.
Right, and I think that is I would prefer the tighter trade, the 18-20.
Exactly. That's what I was getting at. That's exactly what I was getting at. I was looking at both of these, and one of them the tighter one seemed so much better to me, because that's what we talk about all the time, right? Keeping it nice and tight. I get it. It's a debit, and some people you like to get your juice for free, right? So you don't like paying for it. So I wanted to go on record as you saying you prefer the debit trade to the credits trade, even though just because it's better. It's structured better. Don't you agree?
It is structured better, and the thing with this trade is you can sell the 20 calls. So with a 1x2 with VIX, like I just said before, I'm noticing like with the spike, when things spike, you want to be able to give them the vol back, right? That's the whole point. If you're going to use a hedge like this, you give it back. When the market wants it, you give it back. It's one of the first things I learned trading vol when I was like 24 years old. They want it, give it back, because panic is not forever. It's only a short time. 2008 notwithstanding, you had plenty of time. You could have given it back anytime you wanted. But here, like you could close the 20 calls on the 1820 easily on a rip, right? Like the future goes to 18, you get that number, you could sell the 20s because the 20s are going to blow up in value. And then basically you have the 2018 call spread for the right down you might get that for, let's say, $1.50 to you. So, I mean, you've got a little bit of risk in it, but not a ton. So, and you could leave a few extra calls if you wanted because you have it on 1x2. So it's like you have to set your spread up for the trade you're going to get. If you're going to do the 1724, you need December of 2018 or you need February of 2018 to make that thing really pay. So when I teach people 1x2, you want the 1x2s to be snuggled in a little closer together unless you have a lot more time. And I mean time by 3 months, 6 months, something like that, where the Vega can blow the thing apart and make some money. Like a 1724, I'd almost like it the other way. Buy one, sell two, and then you're buying. That's still not my favorite trade, but I would rather do the 1x2 that way and just deal with the risk to 34 VIX or something like that. The way that's structured. So
see, it's like I've been doing the show with you for a while. I kind of know how I know when you're gonna accentuate my point for me, which is always nice. But that's kind of
me.
I did use you, but
one of the new guys.
I used you in a good way, which is to inform our audience, because we've seen this a lot now. We talked about this short 1x2 a ton. And people have really glommed onto it in our audience, and they do it all sorts of crazy ways. And they start doing what our other guy did here, was they start getting wider because they get so premium conscious, right? They all want to make it about harvesting that premium. They want to get the position on, but they also want to get it crazy premium, get all this credit for themselves. And so I just wanted to lay out an example where even Mr. Juice for Free himself says he'd rather pay a debit to do one of these tighter spreads than to collect a credit. Because I get why it's attractive. You collect it's a credit. I'd much rather, what were the numbers said? I'd much rather collect 38 cents and pay 21. But one is structured much better. It's tighter. Tighter works better in these types of scenarios. And look at me, even the rock lobster, you'd rather do it the other way on the 1724. So don't get hung up on the premium madness. Sometimes it's better to pay a little bit to structure it the way you want. Nice and tight. Give yourself a chance to actually get that vol pop on the upside. Some of these crazy wide ones we see, they're pretty much just a recipe for pain. All you have is a bunch of ways you could lose a lot of money and not a lot you could win, because there's so many scenarios in the middle there where it could really come back to bite you. I don't know, Ms. Simon, we talked about this before. Do you have the same view? Maybe you're a contrasting opinion. Maybe you like the 1724 better. Do you like to structure your type of ratio of verticals because it is such a popular trade? Are you on the kind of tighter spectrum like the rock lobster and I? Are you on the other side? Maybe you want to take the counterpoint, sir.
No, I wish I could be a counter in this case, but absolutely not. I mean, I am fiercely in favor of the 1820 buy as opposed to the 1724. I couldn't imagine anybody doing that. In fact, I would sell that 1724 if I could, because it makes no sense. You think about the level of volatility and what have we seen. As the Rock Lobster mentioned, there's really only been 2 episodes in the past 18 months to 2 years where you're going to get such a lift in the overall settlement value anyway. And the spread is very wide. I mean, when you're doing these things, you do not want to have a $7 wide spread, because you get caught in the middle there. That 38 cents is going to be meaningless for you. So certainly, if you're going to do something with some upside, that 1820 is the only possible choice that you can make. I don't have any idea why someone would do that for 1724.
I like it, Simon. See, you're fitting right in here. This only possible way is the 1820. There we go. See, hitting the nail on the head there. But that's not the only weirdo trade. The big size trade out here in the vol space this week, at least on the options side, was in looks like pretty much a roll. Went up on Wednesday. 50,000 of the 845. 8 July 45 call spread, effectively going up 50,000 times for 19 cents. So they paid a whopping 19 cents to go from April out to July, which is pretty much almost as much as they would have to pay to go from July to December. They should just roll it to December, Rock Lobster, and they would have been done. And get paid maybe not even twice as much to do all that way out for the rest of the year. Then you're done. You're hedged for the entirety of the year. If you are one of those people out there who's inclined to be on the 45 strike, then there you go. Not that expensive. But this one, as much as the other two trades caught my eye, this one really kind of caught my eye. We'll call this the WTF trade of the week here. This went up on Tuesday. 10,224 times. It was the April 42 half call spread. It looks like, and again, these executions are always funky, so there could be some, but it looks like the way it went up, they were 95 at $1.05. The April 18s went up for 98 cents. He could have bought them for a decent price, but it looks like he probably sold them 10,000 times for 98 cents, and then turned around and bought 10,000 because they went up pretty much right off the offer there. 10,224 of the April 42 halves against it. So just to reiterate that was the 1842 half vertical done for a whopping 90 cents. Mr. Rock Lobster, if the meatball came and tapped you on the shoulder and said, hey, I sold 10,000 of the Ape 18s, but don't worry, I bought 10,000 more of the April 42 halves against them, what would you say to him?
I don't know. You know what? I might pass out first. So I would have to be revived first.
Don't worry, I'm covered. I bought the 42 halves.
We're good. We're good. I'll tell you what. We've done this show, I've done this show with you for 8 years now, and it never ceases to amaze me what somebody will do to generate some premium. I will believe just about anything what people do to generate premium. And this pretty much qualifies for that. I mean, if you want to be long the market, the hardest thing with VIX is once you're settled that the game is over. It's not, it's not an easy thing to do unless you try to roll that 18 call somehow. Okay, I'll close the 18 call that I was short, and then I will sell the new, whatever call that you're going to sell instead of it, and roll it. You could certainly do that. So I could see how you could manage this trade. But man, it could get ugly for you. That's the bottom line. It has a lot of ugly written all over. It's almost as ugly as the 17, that other 1x2.
And let's be charitable. Let's say he bought it instead, right? Let's say he bought it. Why are you selling the 42 halves for 8 cents? What does that get you? You took off 8 cents off your pretty much $1 trade. I just don't. Yeah. Why?
It's lipstick on a pig.
Yeah. Why? Either way, why? And I know poor people write in saying, "Oh, there's all structured stuff going on against this. This is not done in a vacuum." I get all that. He could have some other positions on. Let's say he sold it. Maybe he's crazy long. Vol futures against it. Maybe let's say. Still, why are you doing this spread on this way? It doesn't make it. Either way, whatever you have against it, it's still the question, particularly on the 42 half leg. That's where my really kind of WTF mind tends to. That one just doesn't resonate with me at all. But speaking of resonating, I know you're crazies, and a lot of the audience loves their VXXB. Let's get to it. So of course, they got to change that name. I'm still not used to saying VXXB. It's just VXX to me. It always will be. But VXXB, again, back. Everyone likes to fix on that 30 handle. We're back below it again. So your crazies will be happy, Mr. Rock Lobster. They can breathe a sigh of relief. That listener who wrote in last week saying that he only hedges the upside with alcohol, he can stop drinking, so maybe his family will be happy. We're back below the 30 handle, 29.5, 2.5 points below where we were this time last week. Today's volume, again, kind of light, about 90-odd thousand contracts on the tape. The ADB right around 140,000. Let's see what's lighting it up out there in terms of the top positions. Let's go number 10 really quickly. 16,000 of the May 41s. And we got number 9, the 16,000 also of the May 43. So a lot of calls open here. Number 8, the June 40, 17,000. Number 7, the June 75s. Talked about those before. Very optimistic, 17,000 of those. Number 6, our first put on the list, the April 30 put. Appropriately enough, that's the strike everybody likes to watch. 18,000 of those. Only 18,000. I thought it would be more. Then the April 43s, about 18,400. Number 4, the April 27 put. 23,000 of those. Number 3, the April 25 half put, about 25,000 of those as well. Number 2, the June 80s, 29,000. And number 1, the May 69 calls, about 32,000 of those are bad boys. So about 1.25 million contracts open, about 725,000 or so on the calls, and about 500,000 on the puts. In terms of the big prints of the week out here, the big trade came yesterday in VXXB. It was the May 41 calls going up nearly 16,000 times. And as we heard in our breakdown there, coming into today, there is still some decent OI on that strike there, but nearly 16,000 of them going up on that. Actually, that was opening all of that. So yeah, 16,061 cents is what that went up for. Looks like that might be an overwrite because they were about 60-cent bid coming out on that. Also saw some call verticals going up today, 8, 30, 32, 1,700 times for looks like about 60 cents. Maybe paper buying that bad boy. Also saw another April 27, 33, 1,600 times. Seems related to the first spread, but it's actually about a couple hours apart. So I don't think it was, unless they were legging into some very, very weird type of spread. Also saw the May 69s. Remember, we talked about those in our open interest. They're actually the number one OI out there position right now. We saw a bunch of those going up this week for a nickel. 10,000 going up on, I think it was Wednesday, maybe Tuesday, going up for a nickel. And it looked like it might be someone maybe closing out some of those, but nope, that was additive. There were 20,000 OI before it. Now there's 30,000, so about 32,000 actually. So the May 69 calls continue to be the dominant position out there in VXXB land. Mr. Rocklobster, I know your crazies love VXXB. Simon, do you still keep an eye on VXXB? Is this something you're watching in your own portfolio over there and keeping an eye on as everyone loves it for the short vol trade, but clearly people are using it for the long side these days as well?
Yeah, look, I think it's a very interesting tool. I mean, it's the reason it's so popular, and everybody loves that carry feature that comes into it. I mean, obviously the same thing is expressed in VIX futures, but just easier here for retail people to get involved. No, I actually really like it. I think it's a very good advent to the complex of products that are available, and it's no wonder that it's so successful. I mean, it's just a nice, easy tool that people can get their hands around, as long as you're not short it. In periods of like the Volmageddon in February of last year, it usually is pretty good. And the bid-offer spread is good. I mean, lots to like about it.
Yes, it does have, I think Mr. Rocklobster has called it the predictably crappy nature of what you generously term the roll yield effect out there. But it is a nice function. It's a feature, it's a feature of the product, not a bug at this point. Mr. Rocklobster, obviously this is where your crazes and your pit chat live and breathe. What have they been up to? Have they been fixating on the 30 strike like everybody else?
Yeah, we have. Oh dear, we are definitely long some 30 puts for late in the April cycle.
How did I know?
We're having an okay day. I would like it to be more okayer, if that's possible. That's probably making the other co-host cringe, but we would like it to be. But VXXB is in the sweet spot of kind of the decay cycle because there is some serious future premium hanging over it, and the VIX. If we can actually get the VIX Cash to stabilize around 14, then it'll kind of start crapping out again a little bit. So it is in the interesting part of the cycle because as a product, VXX sort of ebbs and flows. They crush it and then they don't. They crush it and then they don't. So it's important to understand when the product is more primed to drop. Right now, it is in a good time, especially if we see like low 13 handle for VIX. It could be really nice next week where we could take some profits. So it's like anything, getting to know how the product works and what makes the product work. And right now the market is just sitting there like, okay, we're going to leave these futures really expensive because we don't know what's going on. But VXX, it lives on those futures. It owns those futures. UVXY owns those futures. SVXY, used to be short those futures, but now they're short a half a future. It's like, it's like the one-legged vol product at this point. But this is where it either is going to get interesting or we can make some good money next week, or, we make a little bit of money and go, yeah, whatever. And our pop guns are kind of dry, and then we wait for the next cycle and see what happens.
They should stick a fork in SVXY at this point. Why they persist in that half-legged beast at this point? I don't know.
The charade.
What is the point of it? But that's a conversation we've had before. We shan't belabor it again. Instead, let's keep rolling. There still is some earnings vol creeping into the space here. The season mostly winding down, but we still are seeing some names causing some headlines and making some impact on the space. Two big ones this week. First, we saw Accenture, their consulting firm. They were blowing the doors off to the upside, beating Wall Street forecasts, raising its full-year guidance, so the street liking that. And then, of course, Lulu, they have the infamous sheer yoga pants from a few. They'll never outlive that one. They were also street liking what they're seeing. Apparently, yoga pants are back in fashion. And judging by what I see at my little guy's school when I go to pick them up, they are very much still in fashion. Most of the moms show up there wearing the yoga pants. So that's still the thing these days. And the market liking what they're seeing there, $500 million stock buyback. So a lot of things to like there, tearing it up. Let's see again, we have the earnings move and earnings move results reports available for you. So if you want to break down all the earnings vol for yourself, you can do that, theoptionsinsider.com, courtesy of our friends over there at the old ORATs. And let's start with Accenture. They popped off before the bell on the 28th. They went into their earnings announcement, $166.5 on the stock. They were pricing in about $5, a little over $5, $5.33 actually. What they actually delivered was about $10, again, to the upside. So pretty much 2x their straddle to the upside. And then let's see here. Lulu was the day before, after the bell on the 27th. They closed at about $146.80. And they were pricing in about $13.70, so a pretty rich straddle, all things being equal. That's about nearly a 40% implied vol, and they delivered about a $21 move to the upside. They went up about $167 and probably doing even better than that right now here today. So a lot, even though earnings season winding down, there still is a lot for you guys to sink your teeth into. If you are, again, inclined to watch all that stuff, we have all those reports for you over there on the old website. Now we got to keep on rolling, though. I don't think we even have time for our questions, which is sad. But I mean, just so much good stuff to talk about in the vol space. But we have to get to the most difficult, the most challenging, indeed, sometimes the most embarrassing part of the show. Let me do a quick check here, though, to see. Oh, that's not bad. Not looking too bad. Let's see. A little bit shy of the 14 handle, but we'll see as we get on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, here we are, the part of the show that you like or you think is really hard, like in Simon's case, or maybe a little bit of both. It's challenging and fun in equal measure. Yes, this is, of course, the portion of the show where we attempt to wrestle the slippery pig that is the volatility underlyings, at least for the indexes, I should say, for the coming week. Not by the close, like the Roth Options said, not the close, but actually by the end of show, right now. So a week from right now. Last week, we had a nice panoply of viewpoints. We had the meatball down at the dark side there. He was 1237, so well below where we are now. Mr. Simon, kind of the even keel at about 13 double, 13, a little bit more than 13 half there, and I was to the upside, 14 and a quarter. Took a little celebratory lap there at the beginning of the show, because I know from experience, do it when you can, not by the end of the show. So Simon, you'll learn that in a little bit. But coming into showtime here, we saw the sell-off kind of continuing, but not a huge amount. Selling off a little bit out there. We're seeing spikes just a little bit shy of the 14 handle now, 1396, and VIX Cash at a similar level, about 1394 or so out there. So we're seeing a little bit of erosion out there, but not a ton. Again, the meatball, or rock lobster, easy for me to say. The rock lobster probably would like a little more, as you alluded to earlier with his puts. But that means, looks like I am still the winner. Simon, you were a close second this time. Actually, spikes just came in a little bit again. So you're about 0.3 off. 0.32 off, and I am, about 0.3, about pretty much equidistant right now, actually, on the spike side, Simon. So we're about equidistant on the spike side. So tell you what, charitable guy that I am, even though I was winning at the beginning of the show and now we're kind of tied, I will allow you to go first. I'll say we tied this week. How's that?
Yeah, I'm good with that. Seeing as I've come last every episode before this, I'll take that.
Go for
That's
it.
A win. Okay, so next week, I kind of think that I know Shelley can't make comments about the market, but I think he could probably be involved in this as well. He probably can't be doing worse than me. So I reckon, I think things are actually going to stay relatively calm, unfortunately. That's my kind of view. So I'm going to go 13.25.
All right, 13.25 for Simon here. As we're looking at all things, let me just get that typed in there. There we go. 13.25. I was a tie, so I shall go next. And yeah, that's one of the reasons why I like to go first, because I was, I'm in that range. I haven't narrowed it down in my head yet, but I'm somewhere in that range. A little bit shy of where we are this week, but I don't think, I'm not feeling a ton. I know it's going to make the Rock Lobster and going to make all of his crazies happy. I see the case for why we should be decaying more. I'm just not feeling it for this time next week. We could decay more, and I think we'll get some other shoe to drop sometime during the week. It's going to pop us back up like we did last week. So I'm going to say we're going to be close to where we are right now, actually, this time next week. I'm going to say 13.75 but again, this is the double prediction, Mr. Rock Lobster. This is both spikes and VIX. You got to do both. Luckily, they're within lockstep of each other, so it's not too dissimilar. But so, Mr. Rock Lobster, what's your dual prediction for this time next week?
I'm going to scum everybody. I'm going 13.20.
Wow, you're going to do that to Simon on your first show, huh? You're going to come right in.
I figure we might as well just
throw him into the deep end
right away.
Throw him to the wolves right away. Give them a good taste of what it's really like here on the Volatility Views program. Getting carped by the Rock Lobster on your pretty much fourth show. So well done to you, sir. Teaching him important lessons at an early age. The
fine art of carping a market.
13.20. Look at that. I expect that from the meatball. I don't expect that from you. You're supposed to be the saner, calmer head over there. All right, fine. That music, unfortunately for Simon, he left me alone, so that's kind of nice. Unfortunately for Simon, though, squeezing him a bit on the downside, so not a lot of room for him to run. Unfortunately, that music means we've come to the end of a pretty epic journey through the world of volatility. We talked a lot of fun stuff. We talked about spike settlement, some retail flow trickling in. We talked about what's going on with the weirdness of the VIX futures curve. We talked about what's going on, weirdness of VIX options as well. It was all kind of weird. We also saw some interesting trades going up out here and some analysis there in VXXB. I promise we'll get to more of your questions next week. There's just a lot to talk about this week. Talked about some earnings, Vol and Accenture and Lululemon as well. So all that fun stuff still available out there. Let's go back around the horn again. Shelley, we'll start with you. I know you mentioned before if people have questions about spikes or maybe they want to get their brokerage platform on board with spikes, they want to enlist your help to do that, or maybe what they want to just they want to learn more about the product itself. Where should they go? What should they do, Shelley?
Visit our website at myxoptions.com. You can click on the spikes drop-down, or you can go right to myxoptions.com/spikes. Also worth mentioning, we have some fee changes for this for April 1st, including some very aggressive fee caps. If there's some institutional traders, they're interested in trying the product.
There you go, fee caps. I know a lot of our audience that language certainly resonates with them. And Simon, anything in your wheelhouse you want to leave our listeners with? Maybe a little bit of a hint, a little bit of a tease. We've talked before about some new iterations coming from you guys in terms of the forthcoming Viking, what you're going to call it, as well as some of the underlying, some of the other cool stuff. Anything you want to tease our audience with, sir?
Well, yes. So Viking is something that may be of interest to us in a week or two, but we're going to be distributing a Spikes weekly e-newsletter from next week, so that will keep people fully apprised of sort of the things that are going on, the things that we hope to do, and the product innovations and all that kind of stuff. So, yeah, you should look forward to seeing that in your inbox from next week.
Where do they get that? This on the Spike site as well, or on the MIAX site?
The newsletter that's being run deliberately, separately by us. So it'll be on the T3index.com website, and you can subscribe from there.
All right, so head on over to T3, just the letter T and the number 3 index.com, and you can sign up for the newsletter. Maybe we'll put a link to that in the show notes here as well to make it a little bit easier for you to find. So all you guys who have questions, I saw some of you here in the voicemail have questions about the underlying and stuff. You can ask Simon directly while you're waiting for the next show. And Mr. Rock Lobster, while you're waiting for your VXXB 30 puts to come to fruition, what is cooking from the vol side of Option Pit, sir?
We have a vol class next Saturday, our Saturday class. The note will be up for it on Monday to sign up. Get your learning on for vol. Of course, my vol newsletter at optionpit.com is starting off nicely in 2019. I think we have 12 or 13 trades, 14 trades on, and 1 loser. So, and I also trade the letter myself. So if I get in front of you on a trade, it's tough beans on you. But everybody knows that. So you can go sign up for it.
We saw that with Simon. We saw that with Simon today. You're not afraid to front run or carp somebody. You'll do what you got to do.
I just tell everybody I am doing this.
Oh, you're a paying subscriber to my newsletter? Tough beans to you. You're out.
Tough beans to you, but actually most of my clients actually get better prices than me because they're better at it. Because by now they know how I think. So, but anyway, yeah, you can come on over to see our vol newsletter, weekly videos, archives of how to trade volatility. There's so much volatility there, it might make your head cave in. But Option Pit crazies like it, so we keep giving it to them.
All right, you can check it out. Option Pit People. Got 3 things going on over here as we wrap up the show. Check it out, optionpit.com, to learn more. And on behalf of the Rock Lobster and Simon and Shelly and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, and for, of course, listening live. We love you guys, too. We'll get to all your questions. Don't worry. Keep those questions flowing. Keep them coming. If we don't have a chance to talk about them on the show, we'll chime in on them intra-week or on other shows. We'll get you answered. Don't worry. So keep those questions coming. And we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.